Hey everyone, and welcome to Today Explainer. We have got a seriously fascinating breakdown ahead of us. If you've been watching the Greater Toronto Area real estate market this year, you already know it's been a bit of a roller coaster, to say the least. But as we dig into the official data coming out of May 2026, we're seeing a landscape that is definitively shifting. We're finally moving away from those crazy extremes and steering right toward a new balance. And you know what? With that balance comes a whole new set of opportunities, whether you're looking to buy your next place or looking to sell.
Okay, let's dive right into this because this quote right here perfectly captures the current climate. According to the latest market updates, the GTA housing market is, quote, healing gradually rather than overheating. I mean, think about what a relief that is. The absolute frenzy we saw in previous years, it's gone. But the market isn't stalling out either. What we're actually seeing is true market health returning. We're looking at steady improvements and a much more predictable environment taking shape across the board.
So here is our roadmap for today's explainer. 1. The May 2026 market snapshot. 2. What changed in May? 3. The buyer's advantage. 4. The seller's playbook. And finally, number 5, our summer 2026 outlook.
All right, starting right off with Section 1, the May 2026 market snapshot, where we'll look at the macroeconomic reality. To really ground our conversation today, let's look at the financial stakes. Right now, the average selling price across the GTA is hovering very closely around that $1.0 million range. Now, for anyone trying to gauge affordability out there, it's absolutely crucial to understand that even though the market is tightening up a bit, the MLS Home Price Index is actually remarkably softer than it was back in 2025. And that's a massive figure, really, because it tells us that prices haven't rebounded to those astronomical peak levels. It's offering everybody just a little bit of breathing room.
When we check out the year-over-year data, a very clear and honestly kind of surprising pattern emerges. Sales are up while new listings are actually down. Now, traditionally, when demand is eating up supply quicker like this, you get a tighter market which almost immediately shoots prices straight through the roof. But look at that bottom metric. Despite higher sales and lower inventory, prices remain demonstrably softer than they were a year ago. It's a really unique combination, and it essentially sets the stage for everything else we're going to talk about today.
Moving right along to Section 2, what changed in May, and diving deeper into this unique combination.
Now, what's really interesting about this official TREB excerpt is that May is typically one of the absolute busiest months for real estate. And 2026 certainly followed that seasonal pattern with much stronger buyer activity. But here is the major takeaway. Sales improved without a major surge in price. Buyers are definitely coming back to the table, but they're doing so with a highly price-conscious mindset. If a listing is overpriced right now, buyers simply aren't biting. They're totally fine walking away, leaving those overly ambitious properties sitting on the market for way longer.
Which naturally brings us to the pivotal question in any stabilizing market. So, who holds the power? We've looked at the macro data, sure, but real estate isn't just numbers on a spreadsheet. It's a real transaction between two distinct parties. So let's pivot this explainer away from those broad statistics and dive right into the targeted, actionable realities for both sides of the negotiating table.
Let's break that down, starting with Section 3, the buyer's advantage, and how this market is empowering your side.
Let's directly contrast the chaotic peak years of the past with what you're actually facing today. In the peak years, you were dealing with incredibly low inventory and the almost 100% guarantee of a blind bidding war on practically every single property you toured. It was exhausting. Compare that to May 2026. We are looking at a highly favorable environment. You've got healthy, controlled inventory and actual room to negotiate. You finally have the time and, frankly, the leverage to make a calm, calculated decision.
But listen, having an advantage doesn't mean you can just sit back and relax. The ultimate advantage in May 2026 belongs to the people who are pre-approved and ready to move fast. Remember, the market is improving. Because buyers are still so incredibly price-conscious, when a genuinely well-priced move-in-ready home does hit the market, it gets attention fast. Your absolute greatest leverage right now is the ability to pounce on that value before someone else beats you to it.
All right, let's flip the script. Section 4, the seller's playbook, looking at realities on the supply side.
Looking at these new rules of engagement from the report, sellers, you really need to understand something. While May's rising sales numbers are a highly positive sign, they are absolutely not a reason to expect 2021-style pricing. The days of throwing a number at the wall and watching it stick are over. The market hasn't fully shifted back to a seller's market yet. Yes, demand is definitively stronger than it was in the winter, for sure. But today's buyers are incredibly selective and entirely value-driven. If you try to test the market with an inflated price today, you will simply be ignored. So the crucial point is how you adapt. The report outlines 3 mandatory steps for a successful sale in this climate. Step 1. Realistic pricing that is actually in line with recent comparables. Step 2. Strong presentation. Seriously, homes need to be pristine and move-in ready to attract any serious interest right now. And Step 3. A crystal clear strategy from the very first day your home goes on the MLS. If you nail these 3 steps, the buyers are out there and they are ready to transact.
Bringing it all together now in Section 5, our summer 2026 outlook and what's on the horizon for the GTA. Based on the momentum we built up in May, the GTA is clearly, steadily moving toward a more balanced market. The gap between what buyers want to pay and what sellers want to get is finally narrowing as demand slowly but surely improves. If sales keep rising while listings stay controlled, we're pointing toward much more stable, predictable conditions straight through the summer months. But make no mistake, that momentum is not strong enough to erase the leverage buyers currently hold. 2026 is officially shaping up to be a year of gradual recovery. It is not a sharp, sudden rebound.
As we wrap up this explainer, I want to leave you with one final, pretty provocative thought to help guide your next steps. Will you focus on value or get lost in the headlines? Because whether you are buying or selling this summer, the data makes one thing absolutely crystal clear. The key to success in this newly balanced GTA market is to stay completely realistic, watch your specific local trends like a hawk, and ruthlessly prioritize value over the daily noise of the news cycle. Thanks so much for joining me to unpack these numbers, and I'll catch you on the next one.